Hi, welcome to PMT YouTube channel. I, CS Sujadate, will discuss with you today how to determine the aggregate turnover under GST. It's very crucial to understand determination of aggregate turnover from GSTR 9 and 9C perspective as well. As we have seen in earlier video, the GSTR 9, that is annual return, is mandatory for assessees whose turnover for financial year 18-19 is about 2 crores, and GSTR 9C, that is GST audit report, is mandatory for assessees whose turnover is above 5 crores. So let us see, or let us understand in detail how to derive at the aggregate turnover under GST. For better understanding purpose, I have divided the definition of aggregate turnover in two different parts, that is what it includes and what it excludes. Let us first understand what all it includes. It includes all taxable supply, including exempt, nil, and non-taxable supplies. Then export of goods or services or both. And lastly, the interstate supply of person having a same PAN. And what all it excludes? It excludes only two things, that is value of inward supplies on which tax is payable by a person on a reverse charge basis and the taxes under GST. That is central tax, state tax, union territory tax and integrated tax and cess. So just to summarize, how to calculate aggregate turnover? The simple formula is taxable supplies plus exempt supplies plus exports plus interstate supply and deduct the value of RCM and deduct the all taxes which are under GST. Now, for better understanding, let's analyze each of this concept in detail. Aggregate turnover includes taxable supplies which are covered under forward charges. Now, what do you mean by forward charges? Let us understand quickly with a small example. There is a XYZ Limited manufacturing company and a dealer A. XYZ Limited sells goods to a dealer A and raises invoice along with the GST. The dealer A pays consideration to XYZ Limited along GST. Now XYZ Limited is liable to deposit the GST collected from dealer A for supply of such goods to the government. This is the scenario, or this is the example of the forward charge. So all the transactions which are covered under forward charge, the value of all such transactions has to be considered while calculating the aggregate turnover. Next, it also includes the supply of all goods and services or both, which will attract nil rate of tax. The nil rate of tax goods, for example, are salt and grains. It will also cover the supply of goods which are wholly exempt, like milk, fruit, or fresh vegetables, etc. It also includes the non-taxable supplies like petrol or alcohol for human consumption, which are goods which are not covered under GST purview, and also the value of export of services or goods. Lastly, it includes the interstate supplies having the same PAN to be computed on all India basis or PAN basis. What do you mean by interstate supplies having the same PAN? If, for example, if an assessee is having a factory in Maharashtra as well as in Madhya Pradesh, then any supply of goods or services by one state to another state, the value of such transaction has to be included while calculating the aggregate turnover. So let's to summarize what all it includes. Let's have a quick summary of this. It includes all taxable goods, value of all taxable services, then value of all nil rated goods and services, exempt goods or services or exempt supplies of goods, then non-taxable supplies and exports of goods and services. So all together we have to calculate on all India basis or all India PAN basis. So if any assessee is having multiple registrations over a 2 or 3 or 4 or 10 states, then we have to sum up the aggregate turnover for all the states to arrive at the aggregate turnover of an assessee. So this is what all included in the aggregate turnover definition. Now let's quickly run through what it excludes. As we have seen earlier, it excludes only two things. That is the taxes collected under GST. Those are like central tax, state tax, union territory tax, integrated tax and cess. And it also excludes the value of inward supplies on which tax is payable by a person on RCM basis. Now why this is excluded? because the person who is liable to pay GST under RCM, his liability is only to pay the tax to the government, and such turnover is not included in aggregate turnover as it doesn't belong to that person. This is the inward supplies which are covered under the reverse charge mechanism, and hence that assessee is required to pay tax on the reverse charge basis to the government. So I hope this will help you to determine the aggregate turnover while calculating GSTR 9 and 9C aggregate turnover. So if you have liked the video, please subscribe to our channel. Thank you.